What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is July 13th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, because today is the day we've been calling for a major pivotal move in Bitcoin's price following the release of the CPI report, of the Consumer Price Index, which is a benchmark rate measurement for inflation in the US economy. Now, you guys don't need me to tell you this, but inflation has become growingly relevant over the past year, and the CPI, according to Bitcoin's price, has become an even more impactful event on where Bitcoin's price goes over the coming weeks and months. And I think today's report is going to be the pivotal decision point as to whether or not we get a major summer relief rally in cryptocurrencies, or we continue to crater lower in price, having an extended, more drawn out bear market. So we've got a lot of things to dive into. I'm going to try to help you guys to navigate this environment, talk about what to look for to answer that big question of a relief rally or extended sell-off. If you happen to enjoy the video, drop a like, consider subscribing. It's free and it really helps out the channel, guys. All right, let's go ahead and kick things off here. Now, I want to go ahead and just get straight to the substance here. Why is it that the CPI is such an important event? If we go to the US Bureau of Labor Statistics, we can see how the CPI works. Essentially speaking, here on July 13th, we are going to be getting the previous month's data for June of 2022. It takes about 10 to 12 or 13 days before the report goes live with the information. Now, if we take a look at the last two previous reports, the release of the May data or April data that came out on May 11th and June 10th, we can see just how impactful the CPI has been on Bitcoin's price. Let's go ahead and take a look at these dates here. So for example, June 10th here, this was the day that we broke the camel's back, a months-long sideways consolidation, many of which thought was the bottom in the market, including us here, we saw was broken here after a near month of sideways push, now leading us down not just from $30,000 to down here in the $29,000 range, but all the way down here to $17,500. And on top of that, if we go back here and look at one of the previous corrections we were having in price, right when we started to get some relief here on May 11th, the CPI came out and dragged price from the open at $31,000 down towards a low of $25,000. Now, I'm going to be the first to say that it's not just the CPI that's dragging down Bitcoin's price. We had a lot of issues going on in the cryptocurrency space, many of which, thankfully, have been cleared out. That being realized, the CPI and this macro fear of inflation is the biggest pivotal reason why Bitcoin is moving lower. Risk on assets, whether we see Bitcoin as an inflation hedge or not, Bitcoin is a risk on asset. Just like equities and a whole range of other assets, they benefit during periods of time where inflation is low and the Federal Reserve is able to engage in quantitative easing and lowering interest rates, ergo making it easier to create credit and therefore stimulate the price of assets. Plain and simple. If inflation remains high, that means the Fed has to continue rising rates. They have to start doing quantitative tightening, reducing the amount of cash in the system, and that's going to crater Bitcoin even lower if inflation doesn't get under control. Now, when we talk about the estimations here, there are a few different ways to kind of look at it, but one of the biggest things here is that when we take a look at Bloomberg across a whole range of different sources here, from major banks, from individual traders, we can generally see here that the estimate here is around 8.8%, or this is the median. The average here is around 8.74%. So people are expecting that the CPI is going to be pretty elevated here. It's going to stay within the range that we've kind of seen over the past few months, and showcase that all the while there might be a decline in food pricing, there is still elevated costs in rent and energy prices, electricity bills, not just at the pump, but also for your home electricity bill. A lot of elevated expenses that still need to come down. Now, if we do get a surprise here, if the CPI is in this lower band range versus the majority of participants who are really thinking in this 8.7 to 8.9 range, that could be very well a catalyst to pop up Bitcoin in price. But all the while, we are keeping an eye on this range that we're going through. Notice here, again, it's almost as if we're just waiting for the CPI to drive Bitcoin's price, just like the last time here, right after we got the second report in May here, and then we had the one here in June, right? We just consolidated sideways. We're waiting to see what the inflation figures are going to showcase. We need to understand how equities are going to react. equities are going to lead the way. Crypto essentially is an exacerbated asset class, or it exacerbates against the moves of equity markets. If equities really start to pop up here and go past the past day or two of correction in price, then from there, we could see Bitcoin get back up to the top of this channel. And if we get a daily close above this range, unlike the other previous times where we've deviated here, right? Every time we deviated above the channel, we broke back down here, or we weren't able to really sustain a trend. I think you've got a chance for this to really continue climbing here. And that goes as well for Ethereum, right? Even though Ethereum here has showcased all the bearish signs you could think about, right? We've got this descending triangle here, bearish pattern, a ascending triangle that was building up, that failed here, that was broken. We might get a completely off the chain rally here, essentially back into this, and a breakout higher here. We can't take it out of the question. Now, price action doesn't really look like that. Bitcoin and Ethereum are pressing on the lower end. The odds are in favor of probably a further downward move. But I have a feeling here, a lot of people are too confident on that narrative. They're too confident things are going to go down. And that's the big point I want to bring up to you guys here. Look, we've got some crypto right now, but also many of you know that we've been a bit hesitant to average in too heavy, to try to call a bottom. We've talked about dollar cost averaging, but not on a few weeks time frame, but on a multi-month time frame. So you guys know that essentially I'm betting that we're still going to be continuing further down here in the long run, no matter what. But it doesn't mean we can't get relief rallies in price. And especially on setups like this, I gotta tell you guys, crypto has proven one thing here. If you've tried trading crypto markets, while it can be predictable many times, when too many people get too confident that something is gonna happen or follow very basic technical analysis principles, a lot of market participants, or the institutions, know that many people have gone short here. They have built short positions. And if this starts to pop up, which many people aren't expecting now, but if it does, that is going to knock out a lot of people out of their positions. It's going to essentially stop run a lot of people. It is going to liquidate a lot of traders. And boy, do the exchanges and the institutions want nothing more than that. And that is a very, very big point I want to talk about here, guys. Probably the biggest lesson you could take away from this. It's fun to watch the CPI, see how it plays out, and yeah, you can place some small bets. But to be honest, the biggest mistake you can make is trying to bet what's going to come out of this and trying to set up huge positions, because you may even be in the right, but the market, with how volatile it is, can knock out both sides of the trade when it comes to leverage trading, or at least knock you out of your stops. It is very, very likely, because with increased volatility comes increased uncertainty, which leaves us in a position where there's not many good trade setups. So what we should rather wait for here, and I know some people are like, but then I'm going to be buying at a higher price, or I'm going to be shorting at a lower price. No matter what, it's best to wait until we get a trend confirmation. We want to see a daily close above this range, and that's going to give us a much safer bet here on the further extension of price upwards, or a day or two below this range here, where we can clearly see that this channel here has been broken in either direction. And I know that that can be incredibly painful sometimes, but it is usually the best path forward. And if you want to make a trade here, bet, just avoid leverage. Don't have too tight of stops set. And make sure, though, even all the while, you keep those principles in mind, you keep discipline, you have a strategy that protects your risk and makes sure that your reward potential is much more favorable than any potential risk or loss that you could take. Now, I want to go ahead and focus on one key metric here that I think is a sign that we could get a really big surprise here. Take a look here at the altcoin market. Now, all the while, the altcoin market is very, very small in the grand scheme of things. Inflation metrics could pull altcoins down too. I don't want to say that it's invincible to that, but I have to say with the altcoin metric that we utilize here, which is total 2, so it's taking all the altcoin market cap, we subtract ETH, we subtract USDC, we subtract USDT, divided by Bitcoin. What I think this is telling us here is that we've got a very good chance at that summer relief rally. You guys know, I've been calling for price to go down. I still believe it is going to go down over the preceding months. Bear markets don't happen overnight, but there are a lot of people who are incredibly short right now. A lot of people who could very well be underwater if the CPI numbers come out beneficially, right? Markets can play tango, and they will knock out both sides of the trade who get too overly confident and too overexposed. We saw that with Three Arrows Capital and a lot of industry players in the long side. They will do it for damn sure to the shorts as well. And if we get that here, you could get a massive relief rally, not just in Bitcoin and Ethereum, but also in altcoins that could very well continue to garner increased dominance and push up prices even higher. I would say if we get that opportunity, as many of you are like me, you might have some altcoin positions. If we get the breakout higher here and really start to continue higher here up into this range here from back during February to May before the dip lower here, I would take that opportunity to start lowering your risk here, starting to take off those positions. Use it to your advantage. We don't get these opportunities very often because I think after that, we will get a continuation further. The effects here of inflation and the supply chain issues and the layoffs we're seeing across the board, it's going to be a domino effect. We are going to have a real traditional recession, most likely. But again, it doesn't happen overnight. There are plenty of relief rallies in the past when we have those extended recessions. It's likely that we get some kind of relief rally. Bear markets just don't go vertically down, nor do bull runs go vertically up, right? So just like how we have, and this is a great way to think about it, guys. Just like how during bull markets, we have corrections that we buy, right? We buy the dip essentially for those really long-term 10-year bull markets and equities, or during crypto when we have this mid-cycle corrections, we usually say buy the dip. It's the same here in this case where we get rallies during bear markets. We sell the rally, sell the excitement, right? Let someone else buy those positions, take on the risk that they feel is valuable for them, and cash out essentially, protect our capital. That is the biggest focus point here. Now, I want to go ahead and just emphasize here another major thing we can look forward to going over the preceding months. And I think this is again why the numbers can be quite positive here, if not this month, but in the next following month, is the continued decline in oil prices here. We had a failed reattempt to get back into the wedge here. We've rolled over here and basically closed down the vast majority of gains here for 2022. And if we start to press negative here on the annual candle, this is going to spell a lot of bad signs for oil here, okay? If we essentially come back down here towards this $85, $90 range, your annual candle is going to look very overextended here. And that's going to provide all the temporary relief you need for asset prices to start moving higher, because that's going to mean that the CPI is going lower. Natural gas already gotten hit to a decent degree. It's not to say that the rally is entirely over for commodities long term. It could very well come back. But again, we're talking about a relief rally. Relief rallies last about a month to 2 months. So I would say if I was to place my bet here, guys, again, not making any crazy positions or anything, but I got to tell you guys, I think it's going to surprise people. I think the CPI is going to be a little bit better than people expect. And it doesn't mean the Fed has cooled inflation. Trust me on that. I'm much more pessimistic in the long run than most people are as I'm digging a bit deeper here and understanding the effects of inflation. Because even though the CPI is ticking downward, it doesn't mean that inflation isn't a problem anymore. It just means that year over year, the rate of change in the cost of goods is cooling. That's step number one. Step number two is we need wages to come up. The problem is that we're implementing, or what we're entering into is stagflation. Economic growth is slowing. Credit creation in the economy is slowing. Incomes are dropping. People are being laid off slowly but steadily. These kind of effects, and not to mention labor force participation, a lot of things we'll talk about on the next Macro Monday, are going to continue to weigh on the economy and corporate earnings and put us into a likely recession. But that can happen a couple months out. It takes time for these symptoms to start to show. When people are under enough pain for long enough, it starts to leave cracks. These big cracks get bigger and bigger, and you just need a couple dominoes to fall over, and the economy can really start to feel the pain. So I think, again, this short-term relief here, this decline here so far on the gains and oil prices, a lot of people are looking at it and thinking, oh my gosh, we're about to enter into a full swing decline in oil prices. That is going to lead the CPI lower here, and it's going to drive risk on assets higher here. I think it could do that here in the short term. And that could get us up here somewhere between the $25,000, $27,500 range, somewhere along that ballpark. And that's going to give us a lot of opportunity to get out of existing positions and find much better short entries in the market if we want to try to do that. It's not really good to go short here on these lows unless we really get heightened inflation numbers and we get a confirmed break down below this range. Plus we have good protection, good stop loss protection. We're not toying with too much leverage, right? So that's the key stuff here, guys. Now, when it comes back to this altcoin conversation here, the big thing I want to emphasize is that if you're looking at making new additions to altcoins, I recommend focusing more on the longer term, in this case, focusing more on a fearful period that's more drawn out over the long term. I think a lot of people are rushing into a lot of altcoins being down 80%. And I think the big problem with that is that people don't understand how quickly we can go from 80 to 90% and just how much of a difference that can be. But the big thing you should be doing right now is tracking some of the fundamental plays in the market, the ones that are building during this period of time, that are making progress when others are disappearing from the scene. We're filtering out all the noise and we're figuring out where the signal is. And one of those projects that I'm very, very excited about here going into the preceding months in the layer 1 space is Kava, our sponsor for today's video. Now, many of you guys probably have heard about Kava before. Kava is one of the really exciting Web3 protocols that has been one of our long-term projects that we've watched here on the channel. But more importantly, with the release of Kava 10, their integration of essentially the Tendermint consensus algorithm for consensus on the network with a conjunction of Ethereum's EVM as well as the Cosmos virtual machine, allowing for development and deployment of contracts in both ecosystems on one singular network. This has added a really interesting value proposition as we prepare for the next bull market and as the builders are working hard away at building really exciting applications. With the ability to build and deploy applications from Ethereum or Cosmos in one singular protocol, Kava Network has brought a ton of developers to the network, building applications ranging from DEXs, yield aggregators, lending and borrowing protocols, bridges, and other key elements of DeFi infrastructure. And as it has this increased developer flexibility, we also have increased TVL. In just a matter of about a month and a half to 2 months since the launch of Kava 10, the network has seen billions of dollars of TVL coming into the protocol. And what's more exciting than that is the upcoming release later on in this August of Kava 11. This will not only expand TVL due to liquid staking launching as well as Kava Earn, but is going to have increased support for new users by supporting all types of Kava-based transactions for both Cosmos as well as Ethereum applications. But on top of that as well, protocol-owned liquidity. There is a lot of really exciting stuff. So if you guys haven't already, definitely follow Kava Network on Twitter and also give Scott Stewart, who's the co-founder and CEO of Kava Labs, a follow so you guys don't miss a beat on the updates that they've got going on. So to close off this video, I know I've rambled on a bit today, guys. I want to go ahead and emphasize the significance of today's event. No matter what happens here, the most important thing by the end of this video is that we know what to do. If markets continue to rally higher, not only will we potentially be in for a short-term trade if we can get above the range that has been serving as resistance for the past month, and on top of that, we can take advantage of that strength by starting to sell off some of our altcoin positions and de-risk in a risk-off environment. But at the same time, if prices continue to decline and have a clear close below the support band, we can likely find some solid short entries, albeit non-aggressive ones, and we can afterwards start to get more serious about dollar cost averaging as price starts to head down lower, right? Slowly but steadily, passively investing in the market. These are some setups that we can take on here, and we have them ready for when price picks up direction in either way. We aren't going to try to predict what happens within the range of uncertainty, but rather ride the wave of directional certainty. That's it for today's video, guys. If you like my rambling, consider dropping a like, and I'll see you all in the next one. Take care, everyone.